When markets goes up, sometimes you'll hear liquidity is rising. When it's crashing, liquidity is contracting. But what does that actually mean? Today, I want to explain what liquidity really is, why market obsess over something called global M2, and why this one chart quietly explains most major bull and bear markets. Hi, I'm Sibai, and on this channel, I share more on finance and macro deep dive. If you enjoy this type of content, please subscribe to my channel. Now, let's dive in. When investors talk about liquidity, they're talking about how much money exists in the financial systems that can move the market. Prices don't just move because fundamental change, they move because money flows in or out. And that's where global M2 comes in. Global M2 simply is a way to measure how much spendable money exists across the world. It combines the money supply from the biggest economies such as the US, the Eurozone, China, Japan, and sometimes the UK. Then it converts everything into the US dollar so we can compare it against each other. What does it include? Cash, checking account, savings, small times deposit, retail money market funds. In other words, money that actually liquid and can be moved. Not lock-up pensions, not long-term bonds, but money that can flow into spending, stocks, crypto, or real estates. Here's the key idea. When global M2 is rising, more money is chasing assets. That usually shows up as higher stock prices, stronger crypto cycles, rising real estates, and risk appetite returning. Global M2 doesn't move randomly. It's driven by central banks. When central bank injects reserve into the system, bank lends more, money supply grows, and liquidity rises. When they pull it back, liquidity dries up. Markets are basically reacting to this push and pull. Now, let's ground this in reality. If you look at 2020 and 2021, global M2 exploded. And as a result, it's one of the most aggressive bull market ever. And if you look at 2022 to 2023, you see that global M2 has contracted. And as a result, valuation compress, bear markets and crypto collapses. This isn't coincidence. It's a liquidity cycle. Global M2 is not a trading signal. It won't tell you when to buy tomorrow, when to sell next week. What it does tell you is the macro environment. Think of it like a wind direction. Rising M2 is a tailwind for risk assets, and falling M2 is the headwind. You can track it for free using tools like TradingView or public macro dashboards. If you want to understand markets beyond headlines and hot takes, you have to watch liquidity. Global M2 won't make you rich overnight, but it will keep you on the right side of the major cycles. If you found this useful, please subscribe to my channel for more videos like this, and I'll see you in the next one.